buying an asset to do so, and this is, a lot of what I do day to day with my guys on the trading desk is the analysis. So we talk about technicals, quants, and fundamentals. How do we break each of those three down?
So technicals and fundamentals, if you've ever opened or looked at a stock chart, you've got an idea of what technical analysis is all about. And unfortunately, it's an area I see a lot of people can become devotees to. All the answers you need are in the chart. That's simply not true. Try explaining September 11 without knowing that there'd been a terrorist attack. The chart in itself didn't tell you the answer. But the charts can be very, very handy for timing. And timing, of course, is massively important when it comes to active investing. So looking at areas that are relatively cheap to buy stock, oversold, or overbought when the share price has moved up, probably as high or higher than it should be, are important market points to have in in your trading arsenal. So using the charts to help you with your timing is key. The fundamentals, I guess, give you the news flow as to why things are moving in a particular way. So let's say there was an act of terrorism or conflict in the Middle East. Fundamentally, you'd expect to see oil prices move higher because there's the risk of disruption to supply, and the world relies on oil. And so you typically would see oil prices move higher. So if there's a piece of fundamental news pointing toward trouble in the Middle East, then fundamentally you'd expect oil prices to be higher. You can look at the chart to help confirm that. And that's going to give you two of the three boxes ticked, I suppose, in terms of, okay, let's get some exposure to the oil sector.